What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We've got Apple, Netflix, Tesla, Alibaba, Facebook, NVDA, Microsoft, and Amazon. There's a lot to cover, especially with the market scratching up at the all-time highs. There's some specific things we want to point out to you that could give us a small edge going into the beginning of next week. Also, Apple and Tesla are splitting. Alibaba and NVIDIA have earnings, so plenty to discuss as we go throughout the video. And real quick, before we get into it, got to plug the free resources, which are in the description of this video. And if you think you know someone who might benefit by seeing this type of analysis, feel free to pass the video along to them. Jumping right into our SPY weekly chart. If you're a first-time viewer, I want to make your attention to the weekly bull flag that we've been talking about for some time now. We're starting to see that breakout higher, and we've ultimately come up into our first target, which is the retest of the all-time high. What's most interesting about the weekly chart here, though, is the structure of this week's candle. We see more of an upper wick than what we've been used to the past 2 weeks, a smaller body than what we've been used to seeing the past little bit as well as more of a lower tail on top of that. So three things that are all different about the structure of this week's candle than what we've seen in the past, and it's basically telling us that there's starting to become some indecision at this key level of market structure. Of course, the all-time high. You got to imagine the two pieces of trading psychology here are that some people want to see it break out and continue higher, slice right through the all-time high, in which case we've talked about targets up around 350. But on the flip side of the coin, you have all the people betting against the economy, saying how bad it is, how all the businesses are suffering still, and want to see things pull back here. So I think that dynamic will be really interesting to see play out here, just out and around the all-time high over the next week or two. I think a decision will have to be made sooner rather than later. But to see how that plays out will be interesting. So keep that in mind. We are starting to run into that push and pull up here at key market structure as to be expected. So on the daily time frame, this is where things get a little bit more interesting, because what we'll notice is that one day accounts for the entire lower shadow on the weekly bar. So what this is telling us, especially given the fact that the next day retraced at 100%, is that this was just no more than a liquidation break. And what I mean by that is that there was nothing important that happened on that day that caused all of this selling, nothing more than just some panic. And what's interesting, right, we have a Monday's high here, we gap up, we fill the gap, and then sellers catch some momentum, push prices even lower. What you'd normally expect on a day like this is to see some sellers piling in short at the low of the day, expecting some follow through on the next day to the downside, but that didn't happen. We saw that gap up. They should have, if they were smart traders, been closing out their positions, having to buy to close them out, sending prices even higher, and been taken out of the market. So what this is telling us, if we think about this, right? So shorter term sellers got no follow through. They have to close their positions. They're out of the market. Longer term players, the ones who would have caused that movement to the downside that they were looking for, weren't able to do that either. So there should be no sellers in the market at that point in time, right? So that's a bullish sign, this liquidation break that happened on Tuesday and was retraced 100% on Wednesday. What's interesting, though, and slightly concerning is that after that, with no sellers in the market, the buyers should have been able to take this to the all-time high, at least closer than what we did on this little double top here on Wednesday, Thursday. They should have been able to go at least to the whole dollar at 339, but that didn't happen. We saw two really lackluster days where we saw just some sideways action. These indecision candles started to form. And again, this is what I'm sort of talking about, why we're starting to see some push and pull here at the all-time highs. So we're still trading above our support trend line, and that is still a bullish thing, of course. So we are still, favoring a move to retest at least 339. Above that, blue sky territories, whole and half dollars, as well as any intraday levels that do form. To the downside, though, if we break down below our little double bottom here, as well as coinciding with Monday's high at 335.79, we have targets below here at 334.50. Below that, this is going to be the key piece of support going into this week. Why is that? Because that's essentially the low of the liquidation break at 332.32. Underneath that, we start to get into some poor structure. So if this double bottom breaks here, we have a gap fill from 331.25 to 330, the whole dollar. Underneath that, again, another gap exists here from 327.90 to 326.63. So checking in on the Qs, this is an interesting one to look at as well, because just like SPY is sort of struggling up at that all-time high just about, the Qs have done that this week as well. So it's forming a little bit of a double top here. I'm not saying that this is going to be the end of the run here on the Qs, because if you notice back here, we also had a double top. We faded off, and then it took some time to recover and go back up to the all-time high. So not calling a completely bearish turn here, but it does look like we struggled a little bit at this key piece of market structure. If we do get above it, we'll just cover it now, whole and half dollars intraday levels that do form into blue sky territories above until, of course, we get into our resistance trend line at the top of the bull channel. To the downside, though, if this does happen to be the double top, then we're looking at support to come into play, of course, at the support trend line. It's acted for quite some time now. I'm not saying that it's not going to act again, but if it does break, that's where we start to get a little bit more bearish here on the Qs, in which case we're going to start to use our support or horizontal levels below. We have 264.71 as noted by the liquidation break day on SPY, as well as this red day here on the Qs as key support. If we go lower than that, this is going to be the one that we want to pay attention to, as noted by this consolidation range. So it's 260.89 down to 256.54. Do keep in mind our 50 SMA, the blue line here, will start to coincide and rise, forming some super supports at these key levels as we continue trading throughout time. So look for super support first touch bounces at all of these levels if the direction is down. But again, based on the nature of our bullish channel, we've been holding up for so long, so well, I would expect a bounce out of the lower end of the channel, at least to retest, maybe form a triple top at our 274.75 level before continuing higher or breaking down further. And last but not least, checking in on IWM, Russell 2000, and our small caps. I'm actually feeling quite bullish about this chart here because we have a bull flag that's formed on the daily time frame. We've broken out of our consolidation range here that we've talked about for some time, and now we're starting to see another period of consolidation. So if we can consolidate, hold up just below our 160 level, I think any sort of break above, and we can target our levels above at 164.18. I think anything higher than that puts us, up around the all-time highs here in IWM. I'm not too sure that wants to be the play, but at least, be on watch for consolidation below 160 and a break above to 164.18. To the downside, though, it looks like we have formed a bit of a key support here at the bottom portion of our bull flag. That's right around 156.23. If that one gives, of course, coming back down to retest this area of the chart here where we saw some consolidation for about a day, 153.37. Below that, we have poor structure, which could use some repairing at 151.79 down to 150.90. Below that will be the critical support that we want to watch out for because it is the top of our consolidation range, and that's at 149 the whole dollar. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and also subscribe to the channel. That way you know every single time I drop a new video. So jumping right into Apple, of course, making you aware to the 4-to-1 split coming up at the end of August. If you have one share, it'll turn into 4. Apple's price will go lower. I think it's a good thing for the stock as more investors will be able to get involved here. So I think we want to see that continuation as investors get excited about that. But for now, it's going to be the same MO as always. If we break out over the all-time high, whole and half dollars, as well as any intraday levels that form, will be in blue sky territories. To the downside, though, we want to look for anything underneath our 457.29 support. If we go lower, then I think we do want to chop around in this area, as noted by some of the balance that we've seen in the past here. So this could potentially be a look above and fail, where we see a look above the range and then fail back down, in which case the target's 441.02, the lower end of our consolidation range. If that breaks and we continue lower, of course, noting that we have poor structure that could potentially be repaired, under 432, we see a gap fill down to 425.50, and underneath that, this is the earnings gap up. And I think that based on the intense amount of volume that was traded around here, that people will want to keep their positions afloat. There should be some chop around in this area before we, decide a direction one way or another. I don't necessarily think that we want to go that low this week, but that is a potential scenario that could play out. I think the MO, again, seeing that Apple actually established some value higher, whereas the market sort of went sideways. I think that we're pretty bullish here. And again, with investors being bullish about the split coming up, I think the potential for all-time highs and blue sky levels is there. Checking in on Netflix, we have the potential to form a lower high here, especially with an inverted hammer doji that's formed on Friday at a known resistance area based on some of these touches in here. So interesting to see that at 488.41. If we get rejected here, there's a lot of support below, actually. We have our 50 SMA starting to coincide with our level here at 480.50 just about. So look for super support around this sort of zone in the chart anyways. But if that gives, of course, a snappy move back down to our next super support. Very interesting that there's 2 in a row here. Our rising support trend line, as well as horizontal from the double bottom here, as well as resistance in the past. This 467 level is a pretty strong one. If we break down below that, you can tell there's really some room to run to the downside. So I'm not saying that, everything's going to collapse here in Netflix, but do know that if some of this stronger support, or should be stronger support, starts to fail, there is some room to move to the downside. If we get that push to the upside, though, and we negate this inverted hammer for some reason, although it looks like sellers are starting to step into Netflix here. If we go higher, we have a next resistance up above at 496.66. Anything over that, you can tell there's a triple, almost quadruple top up at 510.84 that should provide some nice resistance if that upward direction is in store. So Tesla also recently announced a stock split, but theirs is going to be a 5-to-1 split. So if you have one share, it'll turn into 5, and the price of Tesla will be much lower. What's interesting about this is all of my levels got wiped. So let's start from scratch and just sort of map some things out here. Looks like we have a key support in this area of the chart. Lots of resistance hanging out up here. This is definitely an area I'm interested in as well. We can mark off the all-time high. This looks like a key place where the market was consolidating. And that's sort of the levels that I'm noticing here just right off the bat. Of course, in previous week's video, we've talked about all the poor structure below, so we'll just map out these two gaps as well. I won't waste your time changing those lines to yellow right now, but do know that, again, gap here and gap here. But for now, we are trading back up at what looks like a known resistance point. So whether or not we get some pullback here, that could potentially be healthy for the stock. Again, with the 5-to-1 split, investors are excited that more people can get involved when it does happen. So they might be buying some shares early if they can, if they have the coin for it. If we go over our resistance here at 1675, just about, we're looking at a move to the all-time highs. There's very, very little resistance in this area of the chart, so I think that it could happen sooner than you think, especially with some good news, based on the split coming up. So that's one potential scenario. If we get rejection here at our resistance, it's known resistance, then we're looking at a rotation back down to our balance highs, which is around 1522.50. Anything underneath that, and we have the balance lows, which is at 1468.80, and underneath that are very important, it looks like triple or double bottom rather, with some support back here as well. That's at 1371. We talked about it being a flush point, or maybe actually, so our flush point in last week's video was actually this level here. We did get a small flush below. We didn't get that follow through we wanted to, so hopefully you were able to recognize that and close out your position on this gap up day. I think that's when they announced the split. So if you caught that, nice, and nice little move to the downside. And then if you got out, well done reading the chart and being able to flip long to short, or short to long rather, and just read the chart for what it is. So congrats, new flush point established. But again, where we sit right now, maybe a small pullback. I'm sure an intraday level could potentially form somewhere in here, and then we see a nice bull flag form and then a breakout higher. That's one potential scenario. We have the levels mapped out. Alibaba, kind of a sideways week, if you will. We didn't really establish value higher or lower. It looks like we kind of just chopped around in this sort of zone of the chart. But what's interesting about this is that we are coming up into earnings. So we should see some volatility come into the stock as we anticipate for that move. If we go over our 257.73, look for a swing up to our 265.70 just about. Anything above that, we have 268, which is a high, or the swing high to be on the dot up there. Anything to the downside, though, if we start to break down this level, there's sort of a medium-term level in here. It looks like it was resistance. It's starting to act as support there on Friday. So anything under 252 the whole dollar, we're looking at a rotation down to 248.33. Below that, and we start to see a stronger move to the downside down to 241.50. With that 50 SMA starting to coincide, I would expect a first touch bounce out of that super support underneath that level, though, and we could potentially see 232.75. Facebook, again, just a sideways week here, not an incredible amount of stuff to talk about. We could map out a new resistance based on some of our levels. That's at 263.50 just about. If we can go above that, which based on the hammer that's formed there on Friday, that might be the case, finding some support late in the day and closing off of the lows. If we go above, look for a rotation up to our high, potentially at 278.89. I would say that there will be some bumps in the road. Of course, we have a resistance there as well as there, but ultimately, that's not incredibly strong market structure, so the high could be in store. To the downside, though, it looks like we formed a little bit of a double bottom in here at 258.53. I'm going to get rid of that. I'm not a big fan of that level there, but if we break down below, of course, looking at the next one, we have 256. Underneath that, we have the essentially the level that we want to pay attention to here is going to be our 249 whole dollar. That's where the gap up happened on earnings. Again, just like Apple, I think plenty of people want to keep their position afloat from the gap up and will be buying, so do expect some chop to happen around here. But if we go lower, support trend line could be in play. 50 SMA will be there. Plenty of support, super support, first touch bounce for a retest here. If the direction is bearish, then look for a potential reshort here, in which case we're looking at that next move down to 238. So NVDA is another one of our companies that has earnings coming up this week. Should be interesting to see, especially because they've been on quite the move to the upside. Very, very strong here in the semiconductors or AMD, all these tech sort of stocks that build the actual hardware, microchips, if you will. Interesting little double top that's formed at the all-time high. Inverted hammers, upper wick starting to form. Is it due for some pullback? Coming into earnings, things could either do one of two things. It could either go sideways and hang up here at the all-time highs and then break out on any sort of good news with earnings as a catalyst, or the flip side of that is that it could just go sideways and do nothing. It could just continue to go sideways. And with these upper wicks, it looks like there are some sellers hanging out up here at the all-time highs. So maybe look for some pullback early on in the week to see that follow through to the downside. But I wouldn't be, betting on earnings one way or another. Again, with the volatility, you could get burned even if you get the direction right here. So just mapping out some levels. Anything underneath our 454 level. Very, we're sort of missing a support in here. Let's map that one out. It also coincides with our previous high over here. Very nice. That's at 432. Look for that swing to the downside. Anything underneath that, and we have the top of our breakout zone in here, which is at 421.02. And again, we talked about blue sky levels above. I would, again, be just having this one on watch coming into earnings. Microsoft is interesting. It has filled the gap, so just, these gold levels will turn into white ones in the next video and the next time around. What's interesting, though, is that we're starting to see some resistance on the retest of the gap fill to the upside, so that inverted hammer candle there that formed on Thursday, negating right at the bottom end of our gap there at 210.28 resistance. Seeing if we can get that follow through to the downside early on in the week, we'll have to break down below our 208 level, in which case we're coming back down to fill up that little square there, and we'll come back into the bottom of our gap level fill. So that's at our key breakout point from in here, around 205 the whole dollar, as well as the 50 SMA and the rising support trend line. So this is definitely going to be a buy point for me, at least in the longer term accounts. If it goes lower, so be it, but I will have a nice solid entry there if we do continue higher. To the downside, if all of this breaks, though, we are looking at a level below 202. Anything underneath that, you can tell there's quite a ways for it to fall. It might be a little higher based on some of the lows that we're seeing in here, but 196, 197 could potentially be in store. To the upside, if we negate this and we bounce out of this level, of course, we'll have to fight back up to those resistances we mapped out, but above 211.65 and 215, the whole dollar should be a target in your head. And last but not least, the beast, we have Amazon, which has gotten into its daily support trend line. We actually called this one out in the Discord chat, so if you caught some calls off the lows there on Friday, congrats. It was Cheapy Friday, so we were able to get involved with very little capital. Anything over this, though, our 31.64 level, it looks like we could potentially see a swing up to our next resistance, where we're starting to see a pressure cooker top form at 32.45.94. Anything above, of course, all-time high could be the target, 33.43, above blue sky levels. To the downside, though, let's say our support trend line breaks, then we're looking at some filling up of the triangle, in which case our first triangle is here, down to 30.88. And then, based on the wick there, I would suspect that at least the initial move early on in the week wants to be up. But if we do go down, again, just some levels for you, 30.88, anything underneath, filling up our next triangle down here to 29.92, 3,000, just about. I'd go for the round psychological number, which also the 50 SMA should be catching up with depending on time of week. Underneath that, we have some levels in here which aren't really mapped out, and they should be. This is sort of catching my attention here at 29.23. Again, the 50 SMA is there now. Doesn't really mean much if we're trading throughout the week and it goes higher, but that is a support in between there and ultimately our next level at 27.81. So that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section or by simply leaving the video a thumbs up. Feel free to share this with a friend, and with that, I wish you a green trading week.